So we are here at our 2018 Google-Temasek Internet Economy report launch, and we're very pleased today to have some really distinguished guests from venture capital firms, as well as obviously Rohit and Rajan from Temasek and Google respectively. But before we start, maybe we can just kind of do a simple round of introductions, starting with perhaps Kou-Yi. Just tell us your name, where you're from, and what do you do, and how does it pertain to the Southeast Asian e-economy?
Yeah, my name is Kou-Yi. I'm from Mongseo Ventures. We're an early stage venture capital fund, very focused on Series A, B stages of investments in Southeast Asia. Largely have been in the market for the last 4 to 5 years now, so very close to the developments in the market and particularly what you guys have been observing via the reports as well.
Great.
Good afternoon. Shane Chesson, partner at Openspace Ventures. We focus on Series A and Series B investing in Southeast Asia. Currently looking after 2 funds, managing about 235 million. We've been around since 2014, which was before the Google and Temasek came out with any report. So in those early days, we had to guess what was some of the size of the potential market opportunities. But we're very pleased now to be submitting our information and benefiting from the work that's been done on this report.
I'm Rohit Sipahimalani from Temasek. I look after the investment group, but one of the areas that I've been interested in over the last few years is the growth of the Southeast Asia internet ecosystem. And Rajan and I started in 2016 the first Google-Temasek Internet Economy report for Southeast Asia.
Keith Lin, Temasek, digital editor. The less I say, the better. The show is really for you guys, so I'll hand it time to Rajan.
Hi, Rajan Anandan. I lead Google's business teams in Southeast Asia and India. I think this is a very important topic since the internet in Southeast Asia is a big part of what we do every single day.
Well, my name is Kee-Lock. I'm the CEO of Vertex Holding and also managing partner of Vertex Ventures, Southeast Asia and India. We manage about total about $3 billion US globally. For Southeast Asia, we are early stage investor.
Hi, I'm Paul Santos. I'm managing partner at Wavemaker Partners. We're seed stage investors. We invest primarily in enterprise and deep tech startups. We've been investing since 2012 and closing in on about 100 portfolio companies. 80% of them will be B2B and deep tech.
Great. So let's get started. Just before that, maybe just a quick recap of the 2018 report. I think we saw that this year, according to the report, the Southeast Asian internet economy is expected to exceed $240 billion US dollars by 2025. This is ahead of the original projection, which I believe was 200 million by 2025. So clearly, some really bullish numbers. We are seeing 350 million internet users in Southeast Asia, 90 more compared to 3 years ago. And by the end of this year, we're expecting the Southeast Asian economy to be worth about $72 billion. A lot of it will be driven by key engines like Indonesia, but also Thailand, and I think we are looking at Singapore, Malaysia, and Vietnam as well. E-commerce is a big sector, 23 billion in 2018, which is double that in a single year alone compared to 2017. Online flights, hotels, vacation rental, basically travel, 30 billion in 2018. 11 billion in online media, which includes advertising, gaming, music, and video on demand. And in terms of ride-hailing, a lot has to be said about the growth of that sector. We're looking at $8 billion in online transport and food delivery alone. And in total, since 2015, we've seen some $24 billion raised across 2,400 deals in the past 3 years. And amongst the unicorns, I think all of us are familiar with the 7 unicorns that in Southeast Asia, $16 billion worth of investment in the Southeast Asian, the 7 unicorns alone. So, I mean, those are just some really, top-level numbers. I think we just want to get into, what's beyond just the numbers, what's really happening on the ground, and where are we seeing some challenges and opportunities, really, right? So maybe I can start by asking our co-authors, Rajan and Rohit, a question. I think 2016, as we've seen in the report, really marks the year the Southeast Asian internet economy really grew up, in terms of its maturity. We see, regional leaders, consolidation, and I think the funding ecosystem is a lot more mature compared to say 3 years back, and something we've been advocating as well. Could you help us unpack what's been going on in the past year, and what are some of the key factors or developments that's really accounting for this phenomenal growth and maturity that we're seeing in the past 12 months?
So clearly, one of the things that excited us about 2018 is that we've seen actually an acceleration of growth over 2017 compared to the growth rate you had between 2015 and 2017. And we think it's partly because, further development of internet infrastructure, lower cost of access, and better access, better quality of access, which has helped continued increase in user engagement, which is in 4 of the 6 countries over 4 hours a day in the mobile internet, which is amongst the highest you see in the world. In Thailand, it's close to 5 hours a day. At the same time, you've seen some large players emerge in some of the key areas like ride-hailing, e-commerce, and a couple of other areas. And they have attracted a lot of funding, which has then helped them contribute towards the ecosystem. So it's a combination of these things that have been happening, and I think it's all probably beginning to start coming together right now. So that's really the key trends that we've seen over the last year.
Great. Rajan?
Yeah, I would say, just building on that, I think what has surprised us is this hyper growth in e-commerce, right? So e-commerce in Southeast Asia is now at about $23 billion of GMV and grew 114% year on year. So, at 23 billion, it's of pretty significant scale, pretty much on the same scale as e-commerce in India, but really growing much, much faster than just about any other large e-commerce market in the world, right? And I think it's a combination of both increase in number of buyers. So 2005, there were about 50 million online buyers. Today, there are about 120 million online buyers in Southeast Asia, as well as increasing average order value, right? Where the first set of buyers that got online are actually buying more things tied to improving logistics, infrastructure, and all these companies being able to spend a lot more money on awareness building and so on and so forth. So I think 2018 really has been the year of e-commerce in SEA, and we think it's once you kind of hit that tipping point, you're always looking for those sort of change in S curves, right? And we've clearly seen that in e-commerce. So I think that's one. The other one that's really, really interesting is as the ride-hailing players, particularly Gojek and Grab, have built out these large user bases, right? There are about 35 million consumers who actually take a ride-hailing service at least once a month. About 8 million rides a day, actually, which is pretty huge number. 8 million rides a day is orders of magnitude bigger than any other country except for China today. They're able to actually stack along additional services, right? So food delivery, online food delivery, which was virtually non-existent 3 years ago when we first did this research, is now a $2 billion industry on a GMV basis, and just Indonesia has basically become $1 billion GMV online food delivery industry. So we're beginning to get to that point where scale is really happening quickly.
That's great. That's the view from the macro view. I just wanted to ask our VC guests, do you see these numbers are really bullish numbers? Do you see the reality really squaring with the numbers that we're seeing in the report? Are there specific sectors, opportunities that you guys have been investing in that's really accounting for your pipelines? Yeah.
Perhaps I can start. Yeah, I think we see much of what Rohit and Rajan are talking about. We see the increased engagement. We see the fact that consumers have got more and more comfortable with the e-commerce channel. And as a co-investor in Gojek, we've seen the incredible way that they've expanded from simple use cases to a very broad suite of services. I think one of the most exciting things, though, is that it's not just about engagement or e-commerce transactions. People have an increasing trust and an increasing reliance on their mobile device. And I think compared to other geographies, we've actually managed to reach that trust and that reliance potentially much earlier because the quality of the companies coming through, because we're starting to use payment forms which are on mobile. And that trust and reliance creates an opportunity for the next wave of VC investments in more and more challenging sectors. And so I'm sure many of my fellow panel members will talk about our investments in financial services and health and education and other spaces where the railroads, the trucks, the infrastructure is being laid by the companies that are large today and monitored in the report, but they're actually paving the path for some other quite challenging problems that are going to get solved via the mobile infrastructure that's been developed.
So that's an interesting point, particularly around some of the nascent sectors. I think we've spent a lot of time talking about the 4 key sectors, e-commerce, ride-hailing, online media, and online travel. But from your perspectives, are there any nascent sectors that you think are really accounting and really will drive a lot of phenomenal growth and momentum in the next 12 to 18 months? I think, Shane, you mentioned FinTech as one. But I was just wondering if there are any others that could perhaps are leveraging on the synergies that are being provided by some of the big 4 sectors, and we're really starting to see more spillovers.
Well, actually, I wanted to ask about the definition of the economy, right? And how you were sizing the market. Do you make a distinction between who buys, whether they're consumers or businesses? As I mentioned earlier, we do tend to focus on the business-to-business stuff. And we are seeing a lot of traction in terms of small businesses adopting technology. So maybe I'll pause there. I just wanted to check the definition of the economy, and then I can sort of follow up later on what we're seeing.
Sure.
Yeah, I think let me take a crack at that. So we basically, the research focuses on the six of the 10 ASEAN countries, right? So it's Singapore, Indonesia, Vietnam, Thailand, Philippines, and Malaysia. And then we're looking at these 4 sectors, right? So e-commerce, ride-hailing. Ride-hailing includes online food, online travel, and online media. So I would say, where the consumer versus small business comes in is e-commerce. And within e-commerce, we really try to focus on the more organized side of e-commerce. What I mean by that is we haven't accounted for social commerce, which is very, very difficult, right? So basically, small consumers or businesses selling on things like Facebook, Instagram, etc. We have not accounted for that. So that's sort of what's included. So I think to your question, what we have not included, for instance, is B2B software sales. Right? We have not accounted for that. So you could largely say it's a consumer-centric view. It's a sizing of the consumer internet economy. The only thing is, as you guys know, in e-commerce, you do have small businesses who buy off these platforms because they buy and resell, right? So to the extent, let's say, a small business is buying on a Tokopedia or a Lazada, then that's included. But let's say companies that are actually selling software or SaaS products to small businesses, we have not included that part of it.
So let me maybe concretize it a little more. So we have a few companies that are focusing on small businesses and are using the internet to sell. So Zilingo, for example, is a mobile fashion marketplace. On the surface, it looks like a pure consumer sell, but bulk of their revenues are actually paid. They make money through businesses. We have a software company in Indonesia. Our first investment in Indonesia was a mobile POS company called Mocha. And it raised about $24 million recently. Could we have expected that kind of investment in an SME-focused business? Maybe not. But it seems like as Southeast Asia is trying to grow, 95% of the businesses in Southeast Asia are SMEs. And if we're going to sustain this 5-6% growth rate, these small businesses will need to grow as well. And technology is a great way to do that. And I'm just, maybe I'm biased, but I'm encouraging you guys. Maybe it's something we can explore as we define the economy.
No, absolutely. I think it's a great point. So Zilingo specifically is included because we classify that as sort of organized e-commerce, but Mocha is certainly not, right? So I think all the POS companies and the revenue that goes into any kind of B2B software product, either selling to enterprise or small businesses, we haven't included. Good point.
Yep. So riffing off that a little bit, we do have a bit more of a focus on B2B2C investments, for example, in logistics, for example, which clearly will benefit from what you guys have been seeing in the report. So one of the investments in Japan, for example, was now covering 6 countries, covering a population of about 300 million people, about 15 million consumers touched, actual deliveries done. And we see a lot of value being accrued there as well. And that's largely driven by what you've seen in the consumption, right, in multiple areas and multiple regions as well. So I think, we do see some of these kind of knock-on effects beyond the direct e-commerce into all these adjacencies as well that I think would then feed back into the overall system and enable even more of what Shane was mentioning, expanding because they're trusted now. Things do arrive to me on time. Money does actually go back to the merchant on time. because of logistics, etc. And that would just sort of kick off a virtuous cycle of consumption over the next few years. This is my anticipation.
Well, that's very true. In fact, in the report, we do highlight logistics as having been one of the infrastructural constraints or ecosystem constraints that we felt needed to be addressed. And we did make the point that this year we find that now with 3 million sort of e-commerce deliveries sort of taking place, that's something that is being addressed partly by existing large players who sort of morph the business models,
right.
but also by a lot of startups like Ninja Van and JNT, et cetera, who are sort of trying to address that. It clearly has an impact.
Yep.
But actually, I know we talked about FinTech, and I know, Kee-Lock, you're quite focused on the FinTech space. So maybe you want to share as to what you're seeing in that space in Southeast Asia.
I think the Southeast Asian fintech sector specifically, I think the government generally as a group has been quite, I guess, enlightened. They have generally has been more relaxed in terms of adopting some of the more advanced regulation. So generally speaking, we have invested quite a lot of companies, whether it be B2B or B2C sector, and be it in the SME marketplace platform, or even in terms of remittance, in terms of cash withdrawal, and so on and so forth. What is different, I believe, in Southeast Asia, there are a few factors I think important to take note of it. Is Southeast Asia, as a market, generally has always been big, but suddenly this recent 4 or 5 years have been accelerating. So the question is, why, right? So I think that there are a couple of reasons I believe is one, first sector is because there's a lot more exit. I think investors view, like it or not, investors always want to have returns on their money. Unless they start seeing some return in the recent years, you're seeing a lot more. So I think this report doesn't really capture that exit portion of it. I think if you go down and look at it, there are a lot more return, but big or small, be it Grab or Gojek or whatever that is, a lot more exit. So investors, when they see their money back, they will put more money back into it. Right. So that's first factor. Second factor is very important, beyond just the 650 million people, 350 million mobile users, is that because of the more exit, you're seeing more money. I think some of us have been involved in this much longer. Vertex have been involved since 2008. In the first 2008, the whole Southeast Asia market, total VC money is 35 million US.
35 million.
35 million.
Million. Yeah.
And 100% Singapore.
Right.
And
now 9 billion in the first half.
No. Well, up to August it's about 7 billion US. So the curve has gone up quite significantly. I think Rohit talks about in the past 2 years. Last year I think was about 3 billion US, and this year almost more than double, right? So you can see the acceleration of this part, largely because investors are seeing more return, and investors are more willing to put more money into the systems. So that is a very important factor. I think we talk about government regulations, and that's important because some of us were involved in the VC in Southeast Asia in 1995. I don't know if you remember, 1995. Many of us who have done VC investment in 1995 in Indonesia will always remember what happened. Government will change the rule every now and then, and that created a lot of problem in that market. But in the recent years, governments are more willing to let the entrepreneur or the sector evolve and develop by itself, be it in the media sector or be it in many other sectors. So that created a lot more vibrancy. I think that is important. So fintech sector is one of the area benefited a lot from the governments take a more enlightened approach, letting it flow and letting it develop.
Yeah, I think these are really great numbers that we're seeing. But I wanted also to call upon the reality that we're entering a point of time in the market where there's a lot of volatility, as we are seeing globally. We look at just up north in China, we're seeing tremendous volatility, and there's a lot that's been said about capital inflows and outflows from China into Southeast Asia, vice versa. Does this report, we think, adequately capture the ebb and flow of capital markets? And I know in our projections, they're very much based on what's happening in the industry, but how do we kind of project that view of the reality of economy, the economics of the situation, and some of the numbers and the volatility that we're seeing? Maybe that's something that Rajan and Rohit, you guys want to chime in on, and maybe we can take a view from the VCs as well.
So clearly, it's not going to be a linear trend from now till 2025. We recognize that. I mean, some people ask us, are you being too conservative with the number that you have for 2025 of 240 billion? Because that means a growth rate, in the 20s at best, right? And markets like e-commerce growing at 100% last year. But we recognize it's not going to be a linear trend. You are going to have ups and downs. You're going to have cycles in the market. You're going to have cycles around availability of capital. So, but, as Rajan was saying earlier, the train's left the station. So we think we're on the right path. We recognize that there's got to be volatility, and therefore some years will be better and some years will be worse. But we think generally the steady growth is something that we're fairly comfortable about.
I think for the VCs around the table, we're investing in secular growth trends. We're finding, strong entrepreneurs who have a great product concept, who are showing traction in the market, and we expect there to be a 10-year cycle of increased adoption. The first few years just getting out there and growing, and then very quickly improved unit cost economics. And so for the LPs that choose to put their money with firms like ours, I think they're able to ride out with their LP capital, to ride out the potential ups and downs of the capital markets. Now, that's for a Series A and a Series B investor. I think once you get later stage, you have to think very carefully about when is your exit, what's the valuation of your exit, what are those alternative sources of capital in case those sorts of, the ones that seem obvious today are not so easy in the future. But for us, I think what we focus on with our portfolio companies is making sure you've got a great business that's collecting the information you need to raise money from various sources, keeping your mind open to various sources of capital. And if one particular source of capital becomes less popular or is less aggressive on the market, there should be other opportunities that open up. And so at the moment, as you know, there's a lot of capital flowing in from North Asia. Perhaps at some point that might slow down, but you need to make sure you've got access to investors in Australia and the US and Europe and domestic investors to help fund growth in the event that the North Asian flow of money slows down.
Or even earlier, right, at the seed stage, I think our investors look at us as an uncorrelated risk, in fact, right? Like when we're starting out, we actually really don't care so much about the public markets as much as we care about the founders that we're investing in and the opportunity that they're pursuing. And, so that's why I'll go back to our focus area, which is the enterprise and deep tech. I'll give you another example of a recent investment in Indonesia. It's a company called eFishery. And they take advantage of mobile, they take advantage of a cloud. And the thesis is quite interesting. If you look at the fish pen, so Indonesia is the second largest producer of fish in the world. And if you look at the fish pen, 80% of the costs are fish feed. And today you just throw the fish feed in, and if you don't put enough, the fish don't grow fast enough. If you put too much, you waste money. What this company was able to do was basically create a technology to control how much feed based on the activity of the fish. We're building a platform on top of it, but it's generating about $2.5 million in revenue and is profitable. And there are 10 million fish pens that we think we can go after in Indonesia. So when I see a business like that, it doesn't really matter to us what happens in the short term around the capital markets. If they continue to execute and take advantage of the technology that's quite simple around them. The last part that's really interesting is farmers who've used the technology actually double their income. And so when you're doubling your income after making this little investment, again, the public markets, they don't really matter to these farmers that you're helping.
That all sounds like music to anybody who aspires to be an entrepreneur and aspire to be the next unicorn. Do you think Southeast Asia, and this is really a question for everybody, do you think Southeast Asia is ready to step up and become the next Silicon Valley? I mean, are the conditions right for success? A lot has been said about what's happening in the valley and how you've got the likes of big conglomerates like Google, Facebook, really segmenting some very key verticals. But in Southeast Asia, do you think that the markets are ready to kind of step up? Are the conditions right? Are there specific challenges in the ecosystem that would prohibit this from happening at the rate that we would like to see?
Keith, this is one of the points I always feel that we always have to, measure it correctly. We're always trying to compare ourselves to US or China. The fact of the matter is the US have been VC market has been developed for 80 years. So 80 years, we are beginning of the 10-year cycle. So 80 years, 10 years compared to 80 years, we would always be behind. no matter how, we're always behind. Even China, who has been developing the VC market for the past 20 years, is still behind the US. It took some number. Last year, China's VC sector was 70 billion US VC investment. China, despite its high growth, is still 40 billion. So China is still behind. But as a market, is China VC market good? Actually very good. It's a very strong market. Because the fact it's half of US, is it bad? The answer is no, right? I think the important for us is not so much whether can we be the US or China or beat them or whatever. It's more, are we on the right track? I think the key, I think that's why the Google-Temasek report is important, because it showed that we're actually on the right track. I think 4 years ago when this first report was produced, everybody said, oh, this is just, maybe a marketing exercise. But it shows actually, no, the number actually was underestimating in many sense. So now we show actually Southeast Asia as a whole has been growing and has been, justifying a lot of people's support. So I think as a market itself, I think we are evolving, developing, and growing on its own characteristic. It's not so much important to say, can we ever be the Silicon Valley, or can we ever be the China of the Asia? I think that's not important. It's whether or not, as an ecosystem, are we evolving in the right track? I think that's more important for us.
Yeah, I would support that. I think we're going to have our own unique flavor. Where else in the world do you have one incredibly developed place for high-tech innovation, MNCs, all based here, surrounded by all these different emerging markets with big problems to solve? And so I think we're going to develop our own flavor of innovation. Fingers crossed that it's going to look even better than some of those other alternatives at the end of the day. But I think the area we do need to compete on a global scale, and I think we're starting to, is in terms of the returns to investors. Okay, so when global capital pools make a decision about where they want to invest, they've got a choice to invest in India, in China, more in the US. And so I think what we're seeing, the early days of an industry development here, is that because of the big problems we need to solve and the quality of the innovation that's happening and the work that we put in, fingers crossed, and an exit market that's developing, we have a chance to show world-class VC returns. And that will bring more capital in, as was mentioned before. That capital go in and continue to cycle through the growth and development of our ecosystem.
And I do think that some level of adjustments and correction in the near future may not necessarily be a bad thing. I think it's generally good for that robustness of the system to learn from that, whether from the investor side, going through one of these cycles for us to come out of it, getting stronger. And for the entrepreneurs to see that, because these cycles are going to be inevitable, right? To be able to kind of see through that, learn from that, and survive beyond that, and thrive beyond that. But I think generally, if you pick 2 points, right, 2015 and 2025, and that's just, will we not be at a much better stage in terms of consumption at 2025? I think not many people will think otherwise, right? I think we're quite clear we're going to get there, right? But that cycle in between is going to, I think, at some level, do some good to the ecosystem, right? For folks to come out on the other end of it.
So clearly we're on the momentum, but what is perhaps the one roadblock or one impediment, if for lack of a better word, in terms of the ecosystem that could help us get there faster? I think there was some discussion, I think, in the report about the mobile payments ecosystem. Would that be something that if we could find a solution to, in terms of synergizing the various players and so on and so forth, that could really help catalyze? So maybe we can take some views on that.
Yeah, it's an ecosystem, right? So there are many parts to it. I'm not sure there's one thing, right? There's probably 1,000 little things that's building this momentum, right? Like, it's not just that the mobile phone and the cloud are there. It's that people are using them, and when people use them, then opportunities are created. So I'm not so sure that there's just one thing that the ecosystem needs to address. I think solving important problems, putting the right capital and the right team to solve these important problems will create value. And if you're creating value, you're creating valuable companies. I think we're all in agreement that this is fertile ground. Like, there are not too many places around the world that are sunnier than Southeast Asia. And the fact that there are problems to be solved is part of that opportunity, right? The fact that they're there. If everything was solved, then there's nothing to do. So I try not to, I guess, think about it too much as maybe oversimplifying it to let's just build valuable companies.
Let me share an anecdote with you. In 2010, 2011, I met some folks from a global online travel player. I wouldn't name them, but they were staying away from Indonesia because they felt 2% credit card penetration too low, not worth going into. The same year, I met two gentlemen in Jakarta for the very first time. They just raised a Series A. They were about to launch an OTA, online travel agency. They felt it was a 98% opportunity. And those guys became Traveloka. So digital payment, non-existent, right? For some folks, it's a problem. For some folks, we're going to crack it. And once we do crack it, there's going to be a huge part of go right behind it. So to Paul's point, I think, my faith, and from what I've seen the last 6, 12, 18 months, is the increase and improvement in quality of the founders, and a lot of faith in these good guys who are able to seize those opportunities and seize these inefficiencies and figure it out. And we've seen that, right? And we've seen it in the last 4 to 5 years. So I don't think that's going to stop.
Actually, even in the last 3 years, we talked about challenges around internet infrastructure. We talked about consumer trust. We said that was going to be a big issue, and we said it's not something which changes overnight. As Shane mentioned, you've seen a sea change out there. Now, the other areas, like on talent, we made some progress. I think you need to continue working on that. And then we talk about digital payments, digital solutions. That is an issue. I mean, it's very fragmented, and you still have very few transactions being done online, or payments are being done online out there. So I think those are impediments, but ultimately, as all these gentlemen have mentioned, it's part of the ecosystem. We've seen a lot of these challenges being addressed, and these two will happen, I guess, along the way.
I think just to build on that, I think the accelerators could be policy and regulatory, right? So if you look at a space like payments, I think having a more favorable policy regulatory framework would accelerate digital payments. If you had an integrated trading block for e-commerce, right? If this ASEAN e-commerce framework really is put into practice and you create sort of a seamless flow of goods across markets, I mean, I think all our numbers would get blown out of the water, right? So, in a positive way. So I think, and the good thing is, I think every government now understands how important digital is. I think it's, if the governments that really take a much more proactive view on regulation and policy, I think can create, accelerators. Look, at the end of the day, it's a sub $3 trillion economy. US is at 17 trillion, China is at 10 trillion, right? So the most important thing actually for all of us is that Southeast Asia's GDP continues to grow because the consumers are getting connected, right? Because smartphones get cheaper, data is getting cheaper. You've got enough sort of capital now flowing into the ecosystem. So as long as SEA economies keep growing at 4, 5, 6, 7%, I think we're good. And
I do agree. And I think, one of the things that China has shown us is, the sort of dissemination of wealth down to the pretty pervasive level across the population, right? So the equality in terms of wealth distribution, I think, is one of the key drivers for the growth. And I think government has a big role to play in ensuring that growth is general, is pervasive, so that we see an uplift across a large population, and hence driving that sort of growth.
So just on that note, and I'm conscious of the time, so just one last topic which I want to address is the idea of jobs. So, clearly we are in agreement that it's bullish. There are lots of bright shoots. Paul, to your point, there's nowhere as sunny as Southeast Asia at the moment. What will be needed, right? Beyond the guys who are out there who are starting businesses, for just the general population, right? And I'm speaking to, I guess, the people who will be watching this video, hoping for some inspiration in terms of what's their next career move going to be. What kind of jobs would they be looking to take? What would be, as this tide lifts the boats that is the Southeast Asian economy, what kind of jobs do we think will really kind of address, I guess from a demand perspective, some of the opportunities that come on stream, and that young people could really be, or even people who are looking for a mid-career switch, could really be looking towards in terms of taking ownership of and reskilling and upskilling themselves for.
And robots taking over the world.
No, I think a lot of the technologies we invest in are building new ways of doing things and ultimately productivity. And I think there's going to be new leisure opportunities created for people who are making more money for themselves. And there's going to be new tasks created that will take advantage of these technologies. And so I think what we've seen in Southeast Asia, at least, it's not a massive instant move to robotics. It's more like, here's a new tool to help empower you and be better utilized. Ride sharing being the classic example, where it used to be that the classic Gojek driver was busy in the morning and busy in the evening, but did nothing during the day and nothing in the evenings. Now he can stay busy all day. And it just so happens that creates a whole wave of demand across multiple services to employ more and more people. More and more people want to have that particular type of occupation. You can see it in what we're doing on education, online education, where it's difficult to deliver these forms. There's a lot of cash on delivery. Who wants to actually do that? But if you can get a network of tutors, a network of content in, there's a whole bunch of new ways for you to make an income. And so I think it's going to be very positive for the economy. You're going to see sort of an impact on growth, and ultimately that's going to create a wealthier consumer who will then spend their money. And so I think one category for people to think about if they're thinking about new ideas for their own careers or for their own startups, it's leisure, entertainment, self-actualization. People are going to have a bit more time as the GDPs per capita go up, and they've got a bit more time on their hands to think about what makes them happy, as opposed to what gets them from A to B, or what gets them fed, or gets them the basics covered.
Also, I think it's a great time to be starting up. If you're watching this, you should start up. There are five gentlemen here. You'll find your company, and I think it's an incredible time. I mean, look, if you've got an internet economy that's going to grow from 70 billion to 240 billion in 7 years, I mean, that's like, and we only have 9 unicorns in SEA, right? We're going to have like dozens of unicorns. So I think if you're watching this, you should definitely start up. If you're not watching this, you should probably get yourself familiar with digital.
That you were talking about these points. Parents recently asked me, so in order to be digitally ready, what should their kids study? So I actually told them, first thing you must study very hard on mathematics. They said, why mathematics? I said, everything you're going to do is going to be something to do with numbers. So first thing, you must somehow love mathematics. That's the first thing. It's, okay, check. So the second thing, you must somehow love to like software. Not that you have to be a programmer, somehow you have to love to like software, because whatever you do somehow have to touch software. And the third one, you might better master the language. You say, first two I understand. Why is it that one is important? I say human race, no matter how it is, boils down to communication. Somehow you must master the languages, not language, languages. So you must be able to communicate some multiple languages, preferably 3 or 4 in the long term. So if you are watching this, you just try to master these 3 in school.
And if you don't get the third one, there's always Google Translate.
which is hopefully we'll get to accuracy one day. Hopefully a data will
We'll edit that out for sure. Rohit, any last words on this issue before we kind of close?
No, as we said, we're talking about broad, employment in the ecosystem. And as I was mentioning earlier, apart from the high-paying jobs that will be created for software engineer, data scientists, et cetera, which actually there are going to be a number of those jobs that have been created and will be created. So obviously those are attractive opportunities. But beyond that, I think just the internet ecosystem will allow the creation of a lot more business models. So we talked about the fact that certain SMEs who could never reach some markets will now be able to reach them. And that creates employment there. So it's actually very difficult to sort of say that, look, it'll be employment in this pocket or not. But just the digital economy will create many more opportunities. And I think that's what, particularly in Southeast Asia, should be very good for the ecosystem.
Great. I think we've unfortunately run out of time. So thank you, gentlemen, for a truly invigorating session. I'm sure there'll be many conversations after the dialogue. Thank you all for coming. And I guess until next year, when we have the 2019 version of the report, hopefully with even more bullish numbers, we'll speak again then. Thank you and goodbye.